Bitcoin is an unlikely choice for egg purchasing, but the amount needed per dozen speaks for itself. Bitcoin is beating inflation better than the US dollar. The Federal Reserve says unintentionally in a blog post first released in June 2022. And since updated, the St. Louis Fed compares buying eggs with BTC compared to USD still, with surprising results. Bitcoin hodlers arguably have many better use cases for their BTC holdings than buying eggs. But that is the topic of a dedicated Fed blog post, which attempts to demonstrate Bitcoin's uncompetitive buying power versus the dollar.
To do so, its anonymous author measured the price of a dozen eggs in BTC, measured in Satishis and USD since January 2021. The price fluctuates quite a bit between 28.29 and 68.6, which is much more than it did for the US dollar price. The post concludes. The charts included nonetheless show that since reaching a peak in both currencies in December 2022, the number of sats required to purchase the same dozen eggs has decreased more than the equivalent USD.
BTC hodlers require 70% fewer for the purchase as of August 2023, the latest month for which Fed data is available, versus 58% less US dollars. Versus the start of 2021, the cost of eggs is higher for both currencies, 39% versus 73% for USD and BTC respectively. Here, however, the arbitrary time frame comparison remains less than helpful. At the time, BTC USD traded at practically the same levels as at present, while the U.S. Consumer Price Index year-on-year increase was under the Fed's own 2% target. With the latter now a thing of the past, only a longer-term synopsis provides real insight into Bitcoin's performance. The price of eggs is a fraction of what it was during Bitcoin's last pre-halving year in 2019. Eggflation, seen in 2023, is a comparative blip on the landscape. In dollar terms, the picture is one of solid price increases. The average in mid-2019, for example, was barely above 1.20 per dozen, or 40% less than now, as Cointelegraph reported. Attention is focusing on the greenback this month as the U.S. dollar index balloons to near one-year highs. Actions by foreign states may seek to redress the imbalances their currencies suffer. Analysts suggest, while under the hood, the U.S. economy is showing warning signs. Recession in 2024 is becoming increasingly likely, with even the Fed's own data putting the odds at near 60% in September, while bond yields skyrocket in a fit of the what is known as bear steepening.